This dividend ETF might be better than SCHD. Now, I know that might be insane to say because as dividend ETF investors, SCHD is our holy grail, but you need to look at ticker DIVO. This is the Amplify CWP Enhanced Dividend Income ETF, and it might be a game changer for those that want high dividend growth and dividend income at the same time. Now, I have done a bit of research on DIVO. We're going to look and see how much money you would make if you invested $10K into this fund based on the average returns, how much you would have over 10, 20, even 30 years, factoring in that dividend payout and the dividend growth rate, which are two main variables for this fund. Now, if you guys like dividend investing, making passive income through ETFs, and all-in-all stock market news, you are in the right place. Don't forget to like the video and to subscribe. I talk about a bunch of different kinds of ETFs and stocks, so I think you guys might enjoy it. Of course, let's get into the details, but first we'll roll that intro. Right off the bat, I get impressed by DIVO's return in the last year. It's up 4% despite the crazy rockiness in the market, and that's not factoring in the dividends paid out. We can also see you jump to the 5-year, it's up 46%, and max up almost 60%, which I love to see. I love growth and I love dividends, and I love when you combine the two into an ETF like this one. So, some main factors to think about. We do see some pullbacks, and we have seen one recently. So, it is down about 6% from the all-time high, maybe even a little more like 7.5%. But that gives us more opportunity to buy in at lower prices, which I am a big fan of. To fully understand this ETF, how much it's going to cost us to own, let's check out their website. There are definitely some pros and some cons to DIVO. But let's talk about the fund itself. Income potential. Comprised of high-quality dividend-oriented stocks along with covered calls on individual stocks. Really cool idea to combine both of these things, and it seeks to lower volatility. Dividend and option income may provide lower share price volatility versus the overall stock market during times of broad-based market declines, which we have kind of been seeing, and DIVO has held up pretty well. Now, the one thing I do want to talk about, it has $4 billion in net assets, which is phenomenal, but total expense ratio is 0.56%. That's quite a bit. We've seen some even higher than this, of course, but that's still quite a big number compared to like VOO. That's 0.03%. Number of holdings is 30. We'll take a look at all the holdings really quickly, but you can go through and check all of this information. The distribution rate, just under 5%, but it has really good growth, and that is a key factor. When we look at the fund holdings, we'll go view all holdings. Their website's it's not complicated. It's pretty solid. We can see CAT, which is Caterpillar, Goldman Sachs, Visa, American Express, Microsoft, JP Morgan, Home Depot, Apple, TJ Maxx, RTX, Chevron. Lots of these, all of them spaced out pretty well. No complaints about that by any means. So, all in all, I'm happy with what they're invested in. I mean, I'm not gonna sugarcoat it. They've done relatively well in their investments, and it's what I like about it. It's a little bit different than the other dividend stocks that I hold and the other dividend ETFs that I hold. So, no complaints there. Let's check out the dividend history and see how often it pays out and if the dividends are continually growing. Look at these consistent dividend payouts. Now, because of how it pays them out using options, some options, some normal dividend stocks, we can see it is kind of volatile and not super volatile, but when you're looking at just dividend stocks, you like to see the dividends slowly increase. But this is going to be a little bit more all over the place depending on market volatility, the call options, and a lot of those details. It does pay out monthly, which is phenomenal, and one of the main reasons people like it over SCHD. Monthly dividends are superior in a lot of ways, in my opinion, mostly due to compounding. If you don't know what compounding is, it's a really, really cool way to make a lot of money. And Albert Einstein said it's the eighth wonder of the world, which I 100% agree with. Compounding is phenomenal, and it's a main reason why I invest in dividend-focused stocks and ETFs primarily. We jump to the dividend scorecard, we can see the dividend growth rate is phenomenal. The growth rate over the last year has been 11.9%. Over the last 3 years, 2.53%, which is a little bit low. And going on, the growth rate beyond that has not been great, even dropping on the 5-year CAGR, which stands for Compound Annual Growth Rate. We can see a dividend yield just under 5% and an annual payout of $1.95. Also very, very phenomenal. I'm very impressed by this fund so far. I might have to buy some soon. I don't own any yet, but this is really, really convincing me. So let's check out the drip calculator and see the returns annually for ticker DIVO. One thing I will say about DIVO is I would turn drip on. Not financial advice. It's what I'm going to do when I do purchase some, just because I think that's what really is going to make a difference for this fund in the long run with the large CAGR. Now we can see total return with DRIP on since 2016 is 142%. You're averaging an 11.15% every single year, which is top end of what the market does on average, which is phenomenal. Your starting 10K would be worth $24,000. That is absolutely insane. Absolutely insane. So we see share price as well. We see the price going from 25 up to 39.65 where it is currently, and the chart is just beautiful. Then, of course, we can see with dividends not reinvested compared to dividends reinvested, we're only at 114% total return, down from 142%. And as well as the average annual total return drops from 11.15% to 9.53%. Your 10K is still worth $21,407, which is nothing to scoff at, but there is quite a disparity between these two, and that is why I'm a huge fan of compounding dividends. There are a lot of components to DIVO that I will break down in our calculation. So with 10K invested, that gets you 252 shares. Then we see the distribution frequency is monthly and DRIP is on. Dividend tax rate, we're actually going to zero this out because we're not doing any sort of dividend tax rate. I imagine this is like investing in a Roth as opposed to a normal brokerage account. I don't want to try and calculate taxes because it can be difficult. And so we're going to nix it. But do focus in on taxes if you're doing a normal investment account. Last, we can see our initial annual dividend yield is 4.99%. We're going to expect a 5.5% increase in the dividend per year, which is a little high. I pulled that number from the average of the last couple of years because it's been all over the place. Some years it blows by like 30%. Some years it's negative by like 40%. It all depends on the market, right? And then our expected annual share price is 5.45%, and that comes from the average of trading 11 years. I divided that by the total return of 60%, and boom, you get 60 divided by 11 roughly gets you 5.45%. The exact numbers I did in the calculation, these I'm just pulling out of my head a little bit, but all in all, pretty solid. So after 1 year, which again, the factor is going to be growth over time with DIVO. After 1 year, your 10K would be worth $11,050. You have made $500 in dividends in your first year, and your total return is 10.5%. Now, I know for some of you that might seem really low, but I promise it's going to pick up, and it's going to pick up pretty quick. Like already, 5 years in, your 10K is now worth $16,500. Total dividend payments over that 5-year period are just over $3,000, and our average annual return is 10.56%. Absolutely crazy. When we kick it up to 10 years, we're now at $27,000 from our $10,000 initial investment. Our total return, 173%. We've now made $8,200 in dividends during this decade, and our annual dividend income moving forward is now $1,400 every single year, which is really, really good. I think it's absolutely phenomenal, but we're going to keep going anyway to show the power of this fund. Now, after 20 years, your 10K is worth $74,727 for a total return of 647%. Total dividend payments over that 20-year period is $30,691. Very, very solid. And our now annual dividend income moving forward is just under $4,000 a year, which can cover a lot of things. A cheaper car payment, a nice vacation, a lot of things. So let's kick it up all the way to 30 years. And I like to describe it as someone who's, let's say you're 25. And analogy, that's the word I'm thinking of. Let's say you're 25 and you want to retire at 55, but you don't know if you're going to have enough to live off of. You've invested 10K into DIVO and you've let it grow, compound over that period. Now, are we going to retire off of it? Probably not, but let's see how the returns are. So your 10K after 30 years would be worth $205,000 for a 2,000% total return. You've now been paid out $92,000 over the lifespan of holding this fund, and your annual dividend income is almost $10,600. Absolutely phenomenal. Absolutely phenomenal. What I really, really enjoy about this fund is just the consistency and the growth. But let's go one step further. Let's say you're 25, you're going to retire at 60. So you do 35 years and watch. This makes a massive difference because time in the market beats timing the market. That's one of my favorite things to say. And it's always a catchphrase. A lot of people on YouTube use it. A lot of people in real life use it. And there's a reason for that. So you add 5 more years and your $205,000 becomes $340,000. Now you're up to $157,000 received in dividends alone, and your annual dividend income is $17,643, meaning you could go on an insane vacation, you could pull all the money out and buy a phenomenal house or use a down payment on a mansion. Again, in 30 to 35 years, who knows how much money this will actually be worth, unfortunately, with inflation. But I would say DIVO definitely counters inflation when you use the 5% dividend, the 5% growth, and the near 5.5% dividend growth, a combination of the two, to really master the market and make that money. I hope you guys enjoy this video. It really means a lot to me if you'll like and subscribe if you found value in it. DIVO is a phenomenal ETF, not financial advice, but it is something I will be buying into soon because of the growth and the dividends. If you are interested in learning more about me, check out my main channel, which I'll link down below. If you guys don't know, this is not my main YouTube channel. It's my smaller channel, but you guys are just as equally important to me. So thank you so much for the support, for subscribing, for liking the videos. I appreciate it more than you know. And if you enjoyed this video, chances are you're going to like these ones, especially the one on SCHD, because the returns were absolutely phenomenal. Let me know what you think about those in the comments, and I will see you in the next video.